did catch a stop loss as well, so it's very normal to do that. But we've been expecting some form of flush pullback correction in the last few days. We discussed several indicators that suggested that this could happen. And again, this is a mini flush. This is nothing. This is absolutely nothing. If we compare this to flushes that we had in previous uptrends, I mean, look at this. Look at this. Look at this. This is nothing. This is nothing. And you have to be prepared. I personally don't think this is the last flush. I don't think it is, because there's a lot of open interest, a lot of purse positions still in the market. And eventually, these irrational positions will get stopped out, liquidated, forced out of the market. But what I was saying is, on lower time frames, where I really would like ETH, if you're waiting for a pullback, because I mean, on the other hand, I just would want a reclaim of these zones here. But realistically speaking, I would really like this zone here at 4,300, this POC cluster. Let's see if we have something else there. Oh yeah, there we go. Or is it too far away? Weekly open. Okay, there are a few confluences. So I really like this zone here. 4,300. Maybe extension to 4,250 to weekly open. And then your invalidation is basically below Monday low. Find acceptance below here and we get filled in our levels at 3,920. Very, very simple, right? All you need to do is ignore all the noise, ignore the euphoria at these levels, and listen to your charts. If you don't understand something, I'm at fundamentals, Nodi's at fundamentals, many other traders are in charts and ideas. Ask questions, try to learn. Don't expect to be spoon-fed. If you expect to be spoon-fed, you'll stay at this position where you are today, stagnant, and never develop and never become an independent trader. Try to make sense out of these things and try to learn. We are here to teach you, and that's only what matters. If you don't want to learn, you're not going to make it in this market. I guarantee you that. If you're only after signals, you will not learn, you will not make it in this market. The single most important aspect of Wealth Group is that it teaches you. It teaches you how to catch a fish. You know the phrase. So 4,300 would be a big, big level for me. Maybe on lower time frames. If it gives you some form of 30-minute divergence here, look, that could form as well. You can try along. I personally don't see any other confluences for ETH, like a POC or something like that. But watch out. Set an alert here. You see I have an alert for 4,530-ish. So if it does that RSI divergence, you might try along. But realistically speaking, 4,300 is my big zone. And then this zone here. Okay, so that's ETH. Higher time frame. No mistake if you took profits here. Mistake if you didn't. Always pay yourself. Always pay yourself. We had an IPO of an exchange called Bullish. We had Eric Trump launching alts on Nasdaq. We had one of the most interesting local top signals for me was some banks adjusting their projections about ETH. Like we had JP Morgan increasing their projection for ETH above 7,000. Never a good sign. Why? Because at the bottoms, they changed their projections for lower. At the top or close to a top, they changed their projections for higher. There's no more of a retail-like behavior than what banks do with their projections. I have no idea why they do it, but the hit rate is almost perfect. Bitcoin, okay, retracing most of this move. Because yes, we did get a liquidity grab here, but we don't have a divergence yet. What I would look at here as well is a 30-minute divergence. Maybe it fills this level here, but ultimately a 30-minute divergence is what you need to look at. And this basically tells you that when these flushes happen, you're in no rush to immediately try to long anything if you don't get filled on a wick, right? Because look, the price will develop and potentially even give you some entries at some point. Okay, so this is what I would look at BTC. Lower time frame. I think more important than lower time frame is the higher time frame, guys. And we need to discuss something, guys. I mean, don't come with the divergences are overrated. Please don't come with that. We have a 3-day bearish divergence on Bitcoin that I'm not going to ignore personally. Whether you ignore it or not, whether you have other triggers on it, or you believe fundamentally speaking it can rise, that's absolutely fine. As long as you have your conviction, your setup, your invalidation, right? And you understand when you're wrong. But for me, this is a classical 3-day divergence. I don't remember having a 3-day the last time this cycle. So if this plays out, I expect a bigger correction on Bitcoin in the next few weeks. And then this is our local top. But obviously, a big zone still for me, for Bitcoin, is this area here. $112-ish to 108. These highs, very, very important, right? Even if this is a 3-day bear dip and gives this and this zone holds, that's fine, right? Very, very clean drop, retest, nothing really to worry about. What you have to worry about is if we get this 3-day and this accepts below this here. Fine acceptance below 108, 107, let's say 106, right? Wouldn't be so cool. And then we actually know, okay, we need to wait for these higher time frame divergences to reset. And Becker and diapers indicator. Yeah, that's I didn't want to bring him up, man, but yeah, we discussed that as well. All right. Very clear, right? Lower time frame, you know what to do. 30-minute divergence, you can try the long, especially around POC levels. Maybe it turns into a swing. Maybe it turns into a long that invalidates this 3-day. But to me, I'm a trader of probabilities. A 3-day tells me, okay, time to relax a bit. Can this be wrong? Absolutely. We have seen divergences get invalidated all the time. On 3-day, maybe not so much. But this gets invalidated, and the RSI on the 3-day does something like this. Invalidates the 3-day, fine. This gets invalidated, we look for higher. As long as this is still an option, it's not something I ignore. And the problem is that we don't only have 3-day divergences on Bitcoin, but on many other indexes as well. And I actually honestly don't remember the last time we had 3-day divergences. All right, sorry about that. Just somebody popped into my room. 3-day divergence on total 3. Again, if you have other triggers, fine. You say, I don't care about divergences because for whatever reason, I think total 3 is undervalued, right? So I'll just ignore this. But remember, apart from the 3-day, we have this resistance zone here, right? clear resistance zone. Say you don't care about divergences, you only care about support and resistance, which is absolutely fine. Everybody has their own system. Then what you look at is a reclaim of this area here. Look at these highs, close to 3-day above, and off we go. But as long as this is trading below this area, skeptical, right? Same with total 2, which is looking a bit better though, because it has reclaimed this zone. But we do have a 3-day, right? So the risk here is that this turns out a deviation and finds acceptance below. If it didn't have this higher time frame divergence, I think this would be a really, really good setup to take some longs. Let's say this didn't exist, right? This is a perfect reclaim. Let's look at 2021. Yeah, absolutely beautiful. But we do have that 3-day, right? So it's always a bit tricky in these situations. So what you want to do here is, let's say if you bought on today's dip, you look at this, right? And you say, okay, I know that we have reclaimed a big zone, but we have a 3-day divergence, right? But this is still a big support zone. So I'm buying here. And if I see acceptance below these levels again, I'll just cut my positions, because then I know this can be a deviation, and the 3-day bearish divergence is playing out on total 2 and total 3 and Bitcoin. So you get it, right? We have our levels, our big levels, triggers, invalidations. We're talking about probabilities, no right or wrong, right? If option A plays out, you follow option A. If option B plays out, you follow option B. It's not about predicting, guys. And there are other many other similar examples of divergences printing in the market. I know Woodspot is tracking this as a divergence as well. I'm saying Woodspot because I personally do not consider it a divergence, because this peaked above 50. But Woodspot is pretty accurate. Pretty accurate if you want to follow that. I actually did get access to it today, so we'll test it out a bit. I'm just a tester, it's not available yet. So we'll do some experiments around that, and maybe we can discuss it in the next stream. Okay, let me just check the chat. Very quiet. Come in with your questions, guys, and make sure to tag me. Okay, Marok has one question. How will the dollar breaking down from 98, 97 area in coming days affect the outlook in Q4? And will perhaps top sooner? I think short term, the breakdown of the dollar and the weakness of the dollar is always good for speculative assets, because of what I explained. It's always a hedge against the dollar, right? So a devaluation in the dollar is always good, because people will be looking for exposure towards Bitcoin or towards Ethereum, and not lose net worth because of a dropping fiat currency, right? So I think a breakdown like that would be pretty good, at least short term. And long term, that 96 area matters a lot. I deleted the parallel channel, but the one I had here, you know, this 96 area, this matters a lot. This would probably be one of the biggest catalysts for the crypto market, because if you're in dollars and you see the dollar losing a multi-year, even decade range like this, you can anticipate, I don't know, maybe a drop to 80 area for the DXY. I don't think this will happen, but I'm just talking about probabilities, right? This would be a massive catalyst. And if this was to happen, I wouldn't be surprised if Target's Rego talks about Bitcoin would be reached. But yeah, step by step, guys, right? We're just talking about what ifs here. So just to answer your question, Mara. Is there a new dip on the way during this New York session? Dips are always possible, and I do think that we still can get dips. And the reason why I believe that is this wasn't a flush. This wasn't a flush, guys. Look at this. Look at this. This is a flush. This is a flush. This is a flush. Look at this. It's nothing. It's really nothing. So higher time frame, others doesn't look too bad here. Does it have a divergence? It does one on the day, a 3-day as well, but it's not overbought. The only problem I have with others here is this. All right, let me just get rid of this. So it really looked like we're getting a nice reclaim here. This is very important now in lower time frames for alts. Because we got this reclaim, flush happened, we found acceptance below this again. What would be really bullish here is a reclaim of this area, and then we can potentially even target these POCs here at 340. But as long as this finds acceptance below here, like this, I think we can get more flushes or pullbacks in the next few days. 276, I discussed this a few days ago, still remains a big zone of interest if this is not reclaimed. And then a higher time frame, of course, my lovely 250, 240. But that may come at a later stage. So for midcaps, very simple. Reclaim, good. You're safe with your entries here. You're absolutely safe with your entries here. If you get this reclaim, bearish retest, bad. And we go lower. But have in mind those higher time frame divergences, right? Is ETH going to get flushed like the past with institutional buying now? Biggest baby flush I've seen. Yeah. Yeah, it caught the market off guard. There was just maximum euphoria, maximum positive sentiment. What can go wrong, right? And then we had one data print that in normal circumstances wouldn't really lead to a flush. But I think because of the accumulated open interest, it did lead to some flushes. When buy? If this does not reclaim, you buy here. 276 billion. Will this come today? No, it will not come today. You need to be patient, right? It may come in the next 2 weeks. Reclaim here. You can buy here and have this as your invalidation. Clear? This is about mid caps. For Bitcoin, Ethereum, we talked about the 30-minute divergences. Remember that. For lower time frame, higher time frame, different story. What new stink bits you got for SPX and SUI? I'll probably just buy at 275. I just got filled on a limit on SPX. Let's see what it is doing. Ah, beautiful. This is not my chart, by the way. If you've been in fundamentals, you know that we did target a POC here. Here. Look at this. 135.2. Instant pump. Really beautiful. Anyway, don't want to discuss individual charts. Let's discuss macro. Where do you see New York close today on the charts? Others excluding. I just covered others. For the S&P 500, let's see how they react. By the way, I didn't look at stock markets at all today. Oh, panic on Wall Street. Nothing. See how over leveraged crypto was? That's never healthy. But regardless of this, what I would love to see for the S&P 500, if given, of course, is still a retest of these highs here. If we get this on the typical September drop, that would be a gift, and I think that could help with a further pullback on the crypto market. 4 or 5% drop, not the end of the world, right? We have been basically up only for months. So any pullback, very, very natural. But if we get this, September has historically been one of the worst performing months for stock markets, and stock markets still play a huge role on the crypto market, of course. The crypto market is heavily dependent on this, and ETF inflows are dependent on this, right? So if we get this, we will see some ETF outflows on ETH, on Bitcoin. We've seen some pretty good outflows here already, which tells you how much these markets are correlated. Right, so if you were to get something like this, would personally not panic at all. Would be a really good buying opportunity, at least short term. Not sure about long term, but short term, pretty good buying opportunity. So I don't really care what the S&P 500 does. I only care about this song getting retested at some point. You know what I mean? I don't look at how it opened, how it closed. Not relevant. Got some dollars ready. Yeah, have them ready. Do you think we could get 250 others during September or just 276? I think we need to be prepared for anything, right? Look, no div and market just keeps nuking. That's what I meant with BTC. Even if we got a flush, we need a div, could form in 24 minutes. So keep this in. If you're long, you should look at this. Something like this. A bit too tight, but still a div. And I think ETH was the same. Look at the perfect rejection here. ETH the same. Maybe it doesn't give you a div at all. If Bitcoin does a div, maybe it just gives you a higher low and then goes off. But if you speculate on that, I would wait on the div for Bitcoin. Anyway, the question was about others. Look at this. This is where we drew the box, right? Look at the bearish retest. That's what I mean. This is the box that needs to be reclaimed. If not, first area of interest, 276. We will evaluate local triggers. What that means is we will look where Bitcoin is, we will look where ETH is, we will look if there's any divergences printing, and then we decide if this is a good zone or not. 250 is absolutely possible as long as this area is not reclaimed. I think it is possible. So this is important here. This is disgusting. This is not good. Yeah, so still a lot of time until the 3-day closes, but this is why I mean these reclaims here are very important. Because if not, we're back in this channel. See, we've covered this channel already. Then I think it is possible that we test this zone. Yeah, why not? We have a higher time frame bearish divergences. Absolutely possible. USDT dominance would be an absolute shame if we just front run these lows here. But this is a very important chart. We were able to identify several macro tops and bottoms just by looking at USDT dominance. If you've been along for a while, you know that we did look at this in April and that we did anticipate a breakdown from this uptrend structure, right? And look at this. I still think this is possible, but not guaranteed. This would be a big TP zone in my view if it comes. Maybe something like this. And then we go for this area for a last push in the market. And then this is where you offload if you haven't already. And only if we get a breakdown from this zone here is when you enter the market again. Yes, third time testing this area. Yeah, I know that. But still a support zone until proven otherwise. And a completely new situation develops if this area is lost as support. So keep an eye on this, very important, especially if it starts finding acceptance above here and breaks structure, right? Because what we have now, a high, a lower high, a lower high, lower low, lower low, lower low. And if it starts breaking structure, right, by making a higher high and then a lower high at some point, say it breaks up from this area, goes all the way here, then this nukes again. And what will happen here? People will start saying, oh, we're so back. Bull market is back, right? But no, because realistically speaking, the higher time frame structure of this is broken and USDT dominance is back at an uptrend like it's been many times this cycle. Right? We've had it so many times. So this is what I mean with it is very important to understand the higher time frame structures because they will tell you the actual state of the market. They will tell you where we are in the market. Remember, sentiment will never tell you where we are in the market. Sentiment will lie to you. Focus on TA. Here, banks will be adjusting their projections. Here, banks will be adjusting their projections. Here, we'll have Alex Becker in diapers. You know, all respect to Alex, but just using this as an example. Here, you'll call for BTC going to zero. Right? So sentiment doesn't tell you anything. Focus on these higher time frame structures. This will be very important. Chat, what do we got? No diff USDT, bro. Oh, I'm not sure about that. What a golden chart. Yeah, I agree. Good TP zone if you're positioned low. You don't think we see 4.50 on USDT? What is 4.50? 4.50. First, this is a pretty big resistance area still, right? So as I said, we could rise a bit and then maybe go for a little push in the market and lower for USDT dominance. I think if you get this here, we would have a breakout from USDT dominance, maybe a rejection at first and maybe a reclaim then. So if you get this, maybe just for scalps, I'm not sure if that's a swing zone anymore. But what would be a swing zone? I'm not sure, man. This is a downtrend that's coming to an end. You know what I mean? Now, whether the end is here or the end is here, it doesn't really matter, right? It just means that the returns are becoming less and less positive. Of course, if we get this rejection and if we go for another push down here, alts and ETH will do good numbers intraday, intra-week, right? We could have another 20-30% on alts because this is a daily chart and higher time frame. This it may not look like a lot, but it's still a lot if you follow the markets intraday. But as a swing zone for buying, not sure, man. I'm usually a buyer around these levels, not here. So if you get another uptrend at some point, maybe have a correction until Q4, some swing levels can emerge. But usually I let price action develop before coming up with swing levels. You know, it's very important to let price action develop and then you know better. For now, we got the TP zone that's more important in my view, which is here or here. But what if I TP here and this breaks down? I will be completely sidelined. What if it holds and you didn't take any profits? Right? The odds of support holding is way bigger than the odds of support not holding. A and B, you can always buy on a retest if it comes at some point. Hey, Pocky, good to see you. Come on in if you want, if you're still here. So do you think ETH will rise another 20-30% without retesting 4K zone? For me, as I said, ETH has a very important resistance zone here. I personally don't see why buying ETH spot here brings any benefits at all. I don't see it. After this candle, why is this so low, by the way? What's happening here? Didn't go to 5K, did it? No, yeah, there we go. Yeah, so for me, ETH buying would be at the levels we discussed, and maybe we can have another push. But here, I don't see the benefits of buying it in spot personally, unless this area is reclaimed. So that's all I have to say about it. Woods has TPs at 5K, so could max out after the break anyway if it did. 5K? I don't know. I don't have data at 5K. I don't have anything at 5K. This is my big zone. 2021 highs, guys. What else do you have beyond this? I mean, you can use Fibs, yeah? You can do something like this. But these are always imaginary targets, right? Maybe something to consider later on if this area is reclaimed. But until it is reclaimed, for me, nothing. Nothing. Lower time frame 4,300, higher time frame 3,920. I have a limit for this one. This would be juicy. Higher time frame bearish if it starts doing this, and if it accepts back into this range here. Simple options, right? If you don't focus too much on the intraday. Can we expect from Trump and Putin meeting? What can we expect? Will there be volatility during the weekend? I don't know if there will be volatility during the weekend. Can't predict that. I'm not really looking that much into the Trump-Putin meeting. I don't think it's that important, to be honest. Could lead to a decline in oil if they have some form of agreement, because Russia is basically partially cut out of the oil export market globally, right? There are still, of course, countries that buy oil from Russia, but many countries do not. So maybe if there's an agreement that could lead to a drop in oil, because people will anticipate the increase of supply of oil in global markets, and that naturally leads to a drop. And yeah, maybe that could actually be positive because lower oil prices could mean that rate cuts in the United States become more and more realistic, and other easing measures could also become more realistic, right? Because obviously oil influences inflation quite a lot. And with lower oil prices, people will start anticipating lower inflation. And if that's the case, the dollar could drop a bit, and that could be positive for speculative assets. But that's very far stretched, you know what I mean? But just as a hypothetical option that could happen in the meeting, but we don't know what will happen, so we'll see, and then we will assess. But I'm not like somebody who tries to predict what will happen and try to trade based on that. Yeah, so lots of stuff is coming down now. You know, initial push, and now we can partially fill these wicks. But what I would do is look at the bullish divergences forming. Use the candle closes, not the wicks. Yearly open for Sol could be interesting. 189. I think HBJ has a position into this. I'm long Sol as well, but I'm long from Monday high here. But if it forms this divergence on the 30-minute, and then if Bitcoin forms a divergence as well, I would try this. Just a second, just getting a call. All right, what else do we got? 9 more minutes, so let's answer some questions. BTC forming 30-minute and 1-hour bull dip on lower time frame support, 108. Will we ignore this? Just scalp, of course. Wouldn't ignore it. Wouldn't ignore it. You can even try it actually if you want. But I'm in a few long positions from that flush. Oops. So yeah, I mean this is a divergence on Bitcoin on the 30-minute already. So you might want to take this. 1 hour not yet. Okay, 1 hour not yet. So since this is not formed, I'm not so sure about it. But yeah, this would realistically be speaking be your divergence. Maybe you can wait another candle close, see how it closes, and then try something out. And maybe have your invalidation below this POC here. But I'm not really taking this. A, because of the way the 1 hour looks, and B, because I'm already in a few positions. So I'm not really interested in that. But yeah, a few 30-minute divergences could form here. For Sculpts, maybe here. For Sui. You get the point. And this is why you don't really need to rush into anything, guys. If you don't catch those on a wick, right? You don't just start longing stuff here thinking you missed the next bull run, right? Because we will get more flushes. I guarantee you that. A and B, you can simply see how price action develops. Oh, maybe we get a higher low and you try this, or you DCA from here to here, have your invalidation here, it's always important to assess the situation and see what is forming, and then form a hypothesis, have a valid setup with valid invalidations, and not just start buying because we got a flush, right? If you didn't catch anything on the flush, of course. Could we fill CME gap from last week close today? I don't really care about CME gaps, to be honest. What was the ticker again? Was it something like this? Yeah. This is not something I personally use in my analysis. You know, we've had many instances where we did fill CME gaps here, and then we just nuked. So this is not important for me. It's a bit overrated as an indicator. I always use more local triggers. I didn't see this divergence at all. Here on the 4 hour as well. Pretty clean. Pretty clean. But this will get reset at some point. See here, 4 hour div, div to div, div to div. So maybe if you're patient enough, you could even get this. Maybe from this level here. We shall see. All right, is there anything else? And just tag me if you have a question related to me, because otherwise I'll just think that you're talking to each other. Can you show Bitcoin again? Yeah, so lower time frame would just follow what's happening here. And if you're unsure about the divergences, just use the indicator. I personally don't use it as much because it reads divergences a bit different from the way I do. But if you're not sure on how to read them, just use the indicator from Pocky or whatever indicator you want. All right, guys, 3 more minutes. Is there anything else? I think we covered everything in detail. Lower time frame, higher time frame. So don't forget about these higher time frame divergences. If you're an investor, if you have spot bags, if you're planning to allocate, right? Usually what happens when we have parabolic moves is people always look for buying opportunities, right? Whereas sometimes when you have higher time frame divergences, it's not really ideal to look for investment opportunities, but rather for TP areas. Because if these play out, I think we could have larger corrections. And apart from that, don't forget about the monthlies. Don't forget about the monthlies. They even got even more perfect this month. 3-month 3 drive. Monthly 3 drive, I mean. I personally think that if these play out, I think we will have way better buying opportunities. Maybe in Q4, maybe next year. But we've covered this several times, right? And this is the monthly. And we did talk about a monthly 3 drive earlier as well, and then we got a pretty positive month, right? Of course, this still rolls like 10% because intraday, intra-week, you can still catch a lot of good things. But higher time frame, don't forget about these. And if this plays out, this will take a long time, and there will be ups and downs and ups and downs, and we're back and we're done and we're back and we're done. But as long as the higher time frame structure doesn't change, that's something you have at the back of your hand, right? I have too much USDT now. Feels so weird. That's perfect, man. That's perfect. Look at this, man. I'll show you something. Look at this, man. Look at this. You should be worried about having too much USDT in the green zone. If you have too much USDT here, that's bad. If you have too much USDT here, that's not bad at all. Because here, you decrease your exposure to the market. Here, you increase your exposure to the market. Look at this. August 2024. April 2025. Both the biggest buying opportunities we had this cycle since cycle lows. This was a bear market, so it stayed in the green zone for a bit longer. Red zone, March 2024, market topped. Red zone, December 2024, market topped. Now, red zone, not as deep. Maybe it can go a bit lower if you get that level for USDT dominance, for example, that we discussed, right? But red zone is where you want to decrease your exposure. So you shouldn't be complaining about having too much USDT here. That's absolutely right. Learn when to have exposure and when not. Right? Just learn that. I completely understand what you mean, right? Because in my first years of crypto, I always had the need to have some spot positions, some exposure to the market. And at some point, I also said, well, I think it's a good time to rotate. And I went fully stable, and it felt super weird, right? But if you take profits at parabolic moves and you go into stables, that's completely fine. Even if you stay a few weeks, few months in stables, you can always trade intraday. I see Pocky here. He kills intraday moves, right? So you don't always have to have spot exposure. You only get a spot exposure when it's appropriate to get spot exposure, and in between you just keep scalping, keep taking advantage of all the opportunities. Is there any stream after this? Is Pocky streaming? Let me check the schedule. You're chilling with me? Let me just see if there's somebody else. No, all right. There's Mazza in 59 minutes. Okay, yeah, but for example, if I miss the going deeper and the red miss lots of gains. I mean, yes, of course you can miss a lot of gains, but on the greater scheme of things, in my view, things are getting a bit overpriced. Right? What I personally do, this is my approach. I'm a higher time frame trader, right? I buy this fear here. I did buy in April. I did take profits here. I did take profits here. I did take profits here. And as long as we are in this zone here, I just scalp. You know, you have massive moves on altcoins intraday. Altcoins doing 20-30% moves within a few hours. And that's all opportunities you get from parabolic moves and being in a bull market. But in this zones, I don't worry about spot exposure. I decrease my spot exposure. Right? And yes, maybe I have to wait a few months until I have the next opportunity to load up on spot. And when I say spot, I mean like 6-month positions, right? Like long-term stuff. Not like buying spot and selling it 2 hours later. I mean like long-term stuff where we get the juicy 100-200% moves. So just because you're in stables now doesn't mean that you just stop trading, right? You know that you have secured profits. You put them into your bank. Never forget to put profits into your bank. Do not think I always have to bid more and bid more and bid more. There's so many people that have lost all their profits they made from parabolic moves just because they thought I always I have to go back to the market and make more and make more. That's just greed. take some profits, put it into the bank, buy something beautiful, make a long-term investment, whatever it is. Have some profits for intraday, intra-week scalps, and eventually you'll get this move here and you will say, great that I took profits and now I'm ready for corrections, pullbacks, flushes, whatever. These dips on higher time frame, like 3-day, weekly, and monthly, sometimes bother me. Sometimes in my intraday operation, because I feel like a pullback can happen anytime. Any advice on how to deal with the properly? I don't know. As long as you have your intraday invalidations, it's fine, right? Just because there's a monthly divergence on something doesn't mean you cannot trade intraday. Because a monthly divergence, it literally takes months to play out, right? So when you say I have a nice long setup on something like Solana or Bitcoin, but I have a monthly divergence on it, it will just distract you because it can give you a 10% pop. And that monthly divergence is still there because the monthly divergence, A, takes a lot of time to play out, and B, takes a big move to be invalidated, right? So an asset can literally rise 10% and it still has a monthly bearish divergence, you know what I mean? But you can make use of that 10% move on the intraday. So one way I would think about it is if you trade leverage, perps, and scalp, higher time frame divergences are not relevant for you. Higher time frame divergences are only important for spot positions and long-term positions. If you're an investor, anything intraday, intra-week, you just look at lower time frame divergences, 30-minute, 1 hour, 15-minute, whatever you use for your setups. So I think that way you'll have a better time navigating the market. Weird question, how do these flushes work across all these different coins at the same time? I thought the market makers are just dumping BTC. It's a chain reaction, man. A lot of open interest gets accumulated. What that means is that many people trade altcoins on perps. They don't buy spot, they trade them on perps, right? They open long positions on something like SPX, right? And long positions or perp positions, they get way easier pushed out of their positions, right? It takes a few stops, a few liquidations, and when there's a series of liquidations of a lot of accounts, then the price just wicks a lot, especially on an illiquid coin that has barely any spot demand, something like SPX or any other meme coin or any other altcoin, basically. So that's pretty much how it works, and that's why we say when there's a lot of open interest and funding is going crazy on altcoins, it's important to start taking a bit of profits, be cautious, and also not have a lot of open limits on perps, right? For instance, I had like 4 or 5 open limits today. I canceled many of them. They would have all stopped out. I did eat that stop on ETH. That's fine. One stop loss is okay when you catch 2 or 3 other things. But if you have like 10 open limits on altcoins that are very close by and open interest is skyrocketing, you will get there's a higher chance of getting these flushes, right? So be a bit cautious in that. Maybe a good idea to have fewer limits or have more spot limits or enter more on market based on local triggers, right? Like we said it now with Bitcoin, for example. Like why have a limit on BTC when you can just see the price reacting on lower time frames and seeing whether you get a divergence or not? Yes, of course, you can catch this wick here, and then the divergence forms above your entry, and yeah, you got a nice entry. But it's always better to enter market when open interest is very high because you can get blown out, and in the worst case, you can even get liquidated pretty badly if you don't manage your risk. So that's something worth considering. How to get that chart on VVX? It's very easy. You just go to TradingView. You type in VVIX/others and you press enter, and then it shows up here. And these boxes, I drew them myself just based on historical events throughout the cycle, so bottoms and tops. and then you have it on TradingView. What can we use then for leverage intraday? Which charts to look for? You can still use leverage, of course, no problem with that. Just make sure that you don't have too many open orders, and do not risk too much in case you get a few stop losses getting hit. If I look at the candles, for example, 1 hour, how come mine is not accurate? My last 1 hour candle says 16 while it's 18. That's UTC time on TradingView. It's always 2 hours earlier than Central European time. Marak. What I meant though is how mechanically they sync up all exchanges across all coins. I mean, there's also bots trading, right? These altcoins, and when something like Bitcoin flushes, it just drives an automatic reaction across all assets, basically, since they all follow Bitcoin. So it's obviously a lot of bots trading. It's a chain reaction on a series of stops getting haunted, liquidations happening. Then, of course, some altcoins flush more than others. It depends on the liquidity of these altcoins. It depends on how much spot is involved, how much leverage is involved. It depends on the market cap. Of course, meme coins always flush the hardest because they attract the attention of retail. A lot of open interest is accumulated because people trade them on perps. There's barely any spot demand, so they flush even more. And then some high caps may flush a bit less because they need more money to move in price. And there's always a bit more spot demand on something like Solana, for example, or XRP, and less on perps. All right, see you, Mark. I'm actually also wrapping it up. I gotta go to the gym in a bit. And then I'm heading out in the evening, so won't be much active. But I thought it was a good stream, guys. So thank you for joining. Appreciate it as always. If you have any questions, let me know on the fundamentals as per usual. I'm always there. Only when I sleep, I'm not active on the channel. So let me know if you have anything there. Until next time, stay safe trading and take care. Cheers.